We're going to talk about the 5x5 trading strategy. Before we do, just make sure you hit like, subscribe to our channel. That way you can be notified every time we put a new video up. And what I like about the 5x5 strategy is it's pretty good for short-term bursts in price movement. So we're going to use the relative strength index, and we're going to set that to 5, along with the 5-period simple moving average. And when we do that, we're actually combining momentum and trend. When you combine those two, you're looking at a pretty powerful combination. So the RSI, that's going to show us overbought and oversold conditions in the instrument, whatever you're trading. Well, not a guarantee of any price reversal. What it does do is it helps to show an extension in the momentum of price. And from that extension, we'd expect a reaction in the opposite direction. So when we see the RS line dip below the 30 level, we would consider the instrument to be oversold. We would then look for an indication of a snapback in price and overbought levels. That's indicated by the RSI being above 70. We're going to talk about the 50 level, and that is going to be our short to long, long to short indication. Now, the moving average, we're going to use that as a trend indicator based on slope, and it'll also be used for an entry trigger, and it's going to be the 5-period SMA. So if we see the overall slope is down, we're going to look to take some short trades. A slope that is upwards will be giving us a long indication. And when price crosses the SMA and it closes strongly, we can consider that when you conclude other conditions to be a signal to place a buy or a sell order. Now, there's a lot of different ways to take profits, and every single trader is going to have a preference. You use trailing stops to profit targets. All of those are a viable means of closing out your trades for profits. But for the purposes here, we're just going to consider 1-hour profit targets. And 1-hour profit targets are done just by taking your profits that equal how much you're risking. So for example, a protective stop here is below the setup candle and is a 35-cent stop loss. The buy stop entry is above the high, and we would set it at a 35-cent profit. So using this method of looking for 1-hour profit targets, it's good for testing strategies, but it's also pretty good for real world trading. Just toss in a bit of a buffer to account for your commissions. That's always a good idea. So what's a buy signal? When we're looking for a long trade, we want to see the RSI crossing the 50 level to the upside and a strong bullish close above the 5 simple moving average. Now, the RSI could have crossed a few bars ago, but what we're looking at doing is to avoid an extension of price before we enter. We can also front run, so getting in front of the crossing of the 50 line if the RSI is coming out of an oversold zone. So here, price is coming off of a downtrend. The RSI is oversold. We see a sharp rise in the RSI, followed by a strong close above the simple moving average. The buy stop order placed above the high of the candle. We set our stop loss below the low. And the RSI did confirm a break of the 50 level the day after the setup, which would be the trigger. This is a day trading time frame, and here both trades hit the 1-hour target after coming out of an oversold condition. Now, using the weekly chart here, nothing changes, except a trader may look to hold a position longer using a trailing stop feature. So an understanding of price structure and momentum will help a trader immensely with this and any strategy. Now here, while there are a few candles that close above the 5 SMA, you not only want to see a large percentage of the candle over the average, but you also want to look at strong looking candles. Closing on or near the high is a pretty good sign of strength. You should note that. But you also keep in mind there will be zones of resistance potentially in the way of your price movement, right? So knowing what to look for as price is near a resistance zone will help make this strategy a lot more successful. Now, this is not something you just trade automatically when you see a setup. Remember, this is just showing us momentum in your favor at a point in time on the chart. It would be extremely helpful to have even a basic understanding of reading a chart. So here, this chart shows an instrument heading into a rally from a down move in price. And the 5-period RSI was oversold for quite a few days. We see a strong momentum candle step in, breaking the 5 SMA. Now, this setup is heading right into a level that acted as support, and it strongly supported price, and it could act as resistance here. Well, chart patterns. This example here, we're looking at a double bottom chart pattern. And that double bottom is not confirmed until that resistance level breaks, but you can front run a break while being mindful of risk. Okay, that's a pretty viable approach to do. You don't always have to wait for confirmation. And I want you to note that we have small ranging candles. Now, they're not always a negative thing depending on the shape that they take. This candle with the arrow has a long lower shadow and it actually closed 1 cent off its high. Price reaches a 1-hour target and then just continues going. Now, could you use the chart pattern to help with how you will take profits? Well, think about it. If a double bottom forms, anticipating at least a challenge of the resistance zone is pretty viable as you manage your trade. So on this chart, price did break resistance, it did form a trading range, and then it eventually reversed back down to the downside. Another addition would be using a short-term trendline break as confirmation. So in this example, we will look at a short trade after a run-up in price that happened over 28 trading days. So price comes from an overbought condition, breaks the 5 SMA along with the trend line. Now, there's nothing magical about a trend line, okay, but they do a great job of showing a change in the rhythm of the price movement. On the left, you actually see another setup that got triggered with a strong candle, and it also breaks resistance. Let's cover some important points. Combining a trend line with this strategy is a great technical indication, as is looking for obvious chart patterns. Now, profit targets are going to be up to each single trader, and as you study hundreds of examples, you're going to find some common themes between instruments that have the potential to run, so you'll know what to look for. If you use this strategy in what appears to be a trend change, it does increase the probability of a successful outcome. Now, when we say the word change in trend, that actually means that you are looking at an instrument that was actually trending. Okay, it's not range bound. And much like price flipping around a moving average, if the RSI is flipping above and below the 50 line, you are looking at a choppy market, and it's probably best to move on to some cleaner charts. I hope this gives you something to think about and you can start looking at some charts a little bit differently. Any questions or comments, please put them below. And again, remember, subscribe to our channel so you're always notified when we post up these kind of videos. Thanks for watching.